Well, that was a glimpse of all the madness and the chaos that goes on behind the scenes while we worked from home all through the pandemic and even right now, but just a glimpse of all that goes behind to put up the show that we have from March up until now. But on that lighter note, let's talk business and let's talk about whether there's merit in PSU banks. Can they really catch up to their private peers? What about the fundraising, the QIPs in store, the stake sale, in particular about IDBI Bank and the insurance davy to AGS? Let's try and understand all of that. We have with us Rakesh Sharma, the MD at IDBI Bank, joining in on the show. Mr. Sharma, good morning. Firstly, on the onset, here's wishing you a very happy, healthy 2021 from the entire 18-hour team.
Very much, and wish you also very, very happy and prosperous New Year.
Thank you very much. How are things, Mr. Sharma, when it comes to the grassroots level? Is credit demand making a serious comeback among your customers?
Yeah, we are seeing the growth coming back because as I see, the first quarter, the growth was really very subdued, but slowly it is picking up. But of course, as compared to last year in retail, especially because we are mainly now doing retail, SME and agriculture. So retail, the disbursements as compared to last year in second quarter, it was 50% of that. But now the third and fourth quarter, it is likely to pick up. And but it may not match the last year, but yes, it is picking up. Second, as regards SME is concerned, because of the GECL loans declared by Government of India, so there is good demand there. And we have been able to disburse good amount there, especially and in agriculture and other consumption purposes. A lot of growth has taken place in gold loans. So that way, overall in retail, agriculture and MSME, some growth is picking up now.
Great. Could you give us some numbers as to what kind of credit growth you're looking at for the rest of FY21 and going forward into FY22?
Like, 2021, as I said, number one, there are like no new investments coming up, either in large or even in MSME. So only that, as I mentioned, the growth is taking place in agriculture loan and gold loans and this GECL loan. So that's why, as compared, like last year, we had grown by almost 12% in our home loans. So this year, I am not seeing much growth. Overall, in retail, I am seeing around 5% growth for the 2021. But in 21-22, we are quite sure that by that time, this now vaccine will also come. And the position is stabilizing slowly. We are seeing, some normalcy is coming back. And so next year, of course, I am hopeful that it will be a normal year. And then we'll again start looking for the double-digit growth. But this year, yes, it is maybe around 5 to 6% only.
Morning, Mr. Sharma. Nikunj Dalmia also joining in. Happy New Year and thank you for joining us. We had the disinvestment secretary on the channel last week and he said the following. He said, IDBI Bank should come out of PCA very soon. We are committed to sell our stake in IDBI Bank, and IDBI Bank is in a very formidable position right now because they've done all the cleanup in terms of accounting and provisioning. How much of the view which was expressed by the DIPAM secretary will translate into reality? Let me hear from the management because that was the department view. Let's hear from the man who runs the bank.
So thank you very much, Mr. Nikunj, and Happy New Year to you also. So first of all, as far as the stake sale is concerned, yes, it is the DIPAM's outlook, and Government of India will take a view at the appropriate time because it's ultimately their stake. So when they will go for it, that I will not be able to comment upon that. But yes, as far as turnaround is concerned, our focus was mainly on, make proactive provisioning and that way reduce NPS, have some good capital growth and adequately capitalized, improve our risk management policies and control mechanisms and improve the systems so that in future the situation which had arisen in the past should not arise. And that way slowly in retail we have built up the portfolio. We have realigned our portfolio. And yes, I fully agree with him on all the aspects that the turnaround has really happened. And if you see my net NPA, it was 2.67%. As against the norm which has been prescribed by RBI for that PCA, it is 6%. As against for capital, as against 11.5, we were at 13.67, and now we have raised additional capital also. So certainly, anytime we should be out of PCA, but it's of course it's RBI's decision. But as far as we are concerned, we have really done a good job. Good recoveries have happened. The provision coverage ratio is 95.96%. So that way, I think that the past is behind us, and now we can look forward for the better future. So things are really improving.
Okay, glad to hear that. What is the basic formula or the mathematical representation which is required by RBI for a bank to move out of PCA? And have you achieved all the basic criteria, the numbers, the capital adequacy ratio, which will qualify you to come out of it? Now, when RBI decides, it's their decision. But on paper, do you have a case for IDBI Bank now to come out?
Yeah, actually, two criteria I have already mentioned to you, that net NPA and capital adequacy ratio. Apart from that, leverage is there, that also we are complying with. That, of course, is outcome of capital adequacy. Since we are fulfilling that criteria, this also we are doing. Now, the last criteria is this profitability. So technically speaking, RBI says that there should be profit for the previous full year. Now we are in profit for the last 3 quarters, from March, June and September. So as a matter of fact, we have come in profit. But yes, if we see technically that full year profit, it will come only with the once we complete the quarter. So that is not in my hands. But we are quite hopeful that we will be positive only, and we will be completing that criteria. But yes, in the past, some of the banks who had complied with the norms of net NPA and capital adequacy, they were taken out of the PCA. So that way we were hoping. But ultimately, of course, yes, it's RBI decision. But this criteria also, with the coming quarters, when the quarter is complete, then only we will be able to say that yes, we have complied with the criteria. But we are, positively on that line.
Let's look at the other side, which is the CASA ratio and incremental fresh deposits. Large part of the flows now, incremental flows, are going to private banks. What is coming to PSU banks, that still is moving towards SBI and 2 or 3 other large banks. So what is the update on getting fresh deposits, at least low-cost deposits?
No, you see, this CASA, low-cost deposit, was around, it was 48.3% as on 30th September. It has never been in the history of, IDBI Bank. In fact, about 2 years back, it used to be in the range of 30 to 33%. Of course, one reason I'll agree, that because we have shut a lot of bulk deposits. Because in corporate, there were some restrictions in financing. So the credit growth was not there. So that is why, about 2 years back, my bulk deposits, which was quite high cost deposit, used to be in the range of 30% of the deposit, which has now come down below 15%. But actually also the growth is happening. The accounts are being added. We have, the channel of apart from branch sourcing, we have this source which is called OBST, outbound sales teams. So feet on the street. So then recently, a lot of that iQuick, one app we have introduced, wherever the on mobile itself, they can open the account, KYC can be completed. We have also gone for eKYC, so where all these facilities have been made simpler. So all these factors are adding to that, and in not only percentage terms, in absolute terms also the growth is happening. Last year my CASA growth was in a range of around 11 to 12%. So this year also I am expecting around 10% growth will happen. So this is, liquidity wise, we are quite comfortable. Ratio wise, we are quite comfortable. And whatever we need, more than that, we are getting.
Mr. Sharma, certainly adopting quite well then to digital, but tell us and give us a sense as to where the recoveries will come from. How much are you expecting then in the next few months?
When declaring March results, I had given guidance that we will be making recoveries of around 4,500 to 5,000 crore during the current year. And I maintain that. And the first 2 quarters, the recoveries were around 2,100 crores aggregate recovery. And this 4,500 to 5,000, I am maintaining for the full year. So remaining around 2,400 to 2,900 crore recovery we will be able to make. Yes, I will agree that, because of this NCLT, there has been some slow process in NCLT recovery, but then we are going for alternate sources like AOD and, one-time settlement, resolution mechanism. And then we have, for retail recovery, we have come out with various schemes, which is non-discretionary scheme, and that the branches can enter into OTS. So that way, overall, despite the fact that during the current year, the NCLT recoveries have slowed down, but we will be able to maintain and, achieve the budget which we had fixed for ourselves, that is around 4,500 to 5,000 crore recovery. So that I am quite hopeful.
All right. And how do you feeling about, the entire asset quality within the sector? Where is it that you are seeing the pockets of trouble? And, can you just tell us what that could potentially amount to?
Yeah, in fact, one thing we have to see that the first 2 quarters, one because of moratorium, second because of this Supreme Court stay were there, that now verdict is, expected anytime. So because of the Q1 and Q2 slippages were quite low. In fact, in our case, it was almost negligible. So, but then now this moratorium period is over. And maybe day before yesterday, RBI had also indicated that it will be, the NPS may increase 1.5%. But as far our bank is concerned, here also I will mention that, last year my slippage ratio was more than 6%. And before that also more than 6%, 7%. So this current year, we had fixed the target that our slippage ratio will not exceed 2%. So it will be less than 2 only. And again, I maintain the same ratio. So although of course, there may be some increase in Q3 because of this, bunching and because of removal of this moratorium period. But the overall for full year, we will be able to restrict our slippages to less than 2%. In fact, rather we are targeting 1.5, but it will not exceed 2%. And that I really maintain. And we know that, and of course, I have to thank RBI and Government of India also for that. One, they had come out with DISCOM loans. So that has really helped, the various power companies, because DISCOMs, they availed the loans, and the power companies, DISCOMs were able to clear their dues to the power companies. So that has helped. Then GCL loans have helped. So that way, I feel that, our case, we will be able to maintain the same, slippages less than 2%.
Right. Mr. Sharma, I have a couple of questions for you. You've recently completed a 1,435 crore rupee QIP while you had permission for 2,000 crore rupees. Not just your bank, but all PSUs raised slightly less than the desired amounts. Is that a reflection in any way that PSU banks are going to be underperforming?
One thing I like to mention, yes, this we had our basic issue was for 1,000 crore only. And we, based that remaining 1,000 was green shoe option. So this 2,000 crore, that green shoe option, that, if it comes, we will keep it. Otherwise, okay. If it does not come, so we are okay, because our base price issue was only 1,000 crore. And as against that, 1,435 crore we have been able to raise. Yes, we could not raise 2,000, but there are certain, because we are still under PCA. Although we have complied with the criteria, but naturally investors may like to see that when we are out of PCA. And then there were certain issues also, like December, this COVID situation, how it will happen. But despite the fact that I like to mention that many FIIs, hedge funds and mutual funds, they have invested our shares in our share. And that way, with 1,435 crore, our capital adequacy will improve by 91 basis point. So it's quite good. Yes, of course, we would have loved if we had got 2,000. But it's we have been able to achieve the base estimates. That is quite okay. But once we are out of PCA, maybe we will get a better response once later on, whenever we decide to come for capital raising plan.
Mr. Sharma, but your capital adequacy, as I understand, is already at 13.7%, which is quite a comfortable level. Then why this excessive amount of fundraising? Is it for growth, or is it just a war chest for asset quality issues which may arise later?
No asset quality issue, as I said, that whatever our slippage had to happen, that has more or less already happened. Our PCR is at 96%. And the slippage, as I said, we will be able to restrict below 2%. We have already, more than adequate provision for this COVID. Whatever RBI had prescribed, we have made more than 2 to 3 times of that provision. So that is, so one was, of course, because there were uncertainties. And initially, when we had planned this QIP, so that time this discom loan scheme and all these things were not there. So that is one. That second, of course, we too, build up the resilience in the system, and so that we are adequately strong enough in case of any eventuality. But although I don't see now as such uncertainty will come. Second, of course, the growth also, as you have rightly said. With this, we will be able to grow at 10 to 12% for the next 2 years. In addition, there will be some internal generations also. And internally, we have fixed that, although the RBI requirement is 11.5%, so 1.5% we will keep the cushion. And already capital conservation cushion is already there, over and above 1.5. So whenever capital is coming below 13, we will try to raise capital, whatever in a way form. So that is to build resilience in this system, and second, for growth.
Okay. Now that Mr. Sharma, LIC shareholding has dropped below 51% post your QIP, will they be infusing another 1,500 crore rupees?
Yeah, in fact, because they can 1,500, they have a commitment that they will. But when we will take that, board will decide. Because as you have rightly said earlier, that we are quite adequately capitalized, and it's sufficient for growth also. But yes, because 51%, they can always go up to 51. So whenever either we need or board decides, so it's a almost 2 months process, because it will be in the form of preferential capital. But as of now, we do not have any plan. But we have commitment from LIC. Anytime we need, they will give us capital. So that is in fact one good support which is always available at the backup of the system. So that gives you good confidence.
Indeed, it's a great comforting buffer, if I can call it that. The one point, Mr. Sharma, which critics always bring up when we talk about IDBI Bank is that you're unable to grow your housing loans aggressively at a time right now when average home loan rates are at 6.75%. You're seeing real estate purchases at an all-time high, especially in states like Maharashtra. You're unable to aggressively build onto your mortgage book. What is it that you have to say to this?
No, aggressively, one is, of course, we are quite cautious. But if you see my 2018-19 growth, we had grown by 16%. That time base was quite it was quite small, and we were more of corporate banker. So then 1920 we grew by 10%. So this year, of course, because of this COVID, it is around 5 to 6% growth may happen. But yes, we have our internal controls as far as interest is concerned. As earlier, there was, our interest rates were slightly higher, but we are now quite market competitive. So that way, this is not, and there is no issue. As far as another issue, yes, we have done some organization restructuring also. Earlier, our, although we were having retail processing centers, so they were reporting to the zonal heads. So there was, issue was that marketing team is also the same and the processing team is also the same. So to put more emphasis on the quality, now we have done further verticalization wherever RSEs will be reporting to the head office. So this will help, not only in improving the growth, but also, improving the system and the strength of the quality. My net NPA, NPA in home loan is 1.16%, which is quite, better than the industry. So that way the quality is good. But yes, we will grow by 10 to 12%. So that is okay. We are as of now. But depending on, how the demand takes place, we can always keep on revising our targets.
Okay. Mr. Sharma, so good to have you on the show, and we'll chat again in 2021 very soon.
Yes, so thank you very much and wish you all Happy New Year.
Thank you so much. Wish you the same.